In yesterday's video, I shared tips on how I boost profitability. I showed trades on Solana and Doge. I'm very grateful for all the comments, and if you have any questions, please let me know. Daryl said a fantastic comment and I wanted to share it with you. Tier 1 and Tier 2 charts are required first to confirm a buy environment exists. This is really good thinking. When a buy environment exists, look for buy opportunities in the alts. Kate and I are so happy that these videos are being helpful to you. Stephen Mary Ellen said, "Ken, these types of videos are very powerful. I have become consistently profitable trading this way." Well done, my friends. Sanjeev has been smashing that like button. Thank you, my friend. And if you're new, a very warm welcome and welcome back, CTKS family. In this video, we're going to look at what the heck happened in the past 24 hours. Stay tuned, it's going to be a lot of fun. Let's run the numbers. Before we get into things, I'd like to answer two questions from yesterday's video. Nash G asks, was it the cut through that made you confident to buy at those levels as price was rising? It's basically all about the structure of the Tier 1, Tier 2 and Tier 3 charts. If there is positive market momentum, we feel relatively safe so long as the structure reflects that of what we're trading or investing in. Please let me know your questions. I think it's really good to cover these off in the next episode. When I sell, I have a targeted rate of return on my trades. I'm looking at an annualized rate of return that I'm comfortable with, something pretty big. Fiat Crusher asked the question, love to hear more about that targeted rate of return. One thing with the markets, Fiat Crusher, is, and by the way, fantastic name, we have to move with the actual market itself. We can't impose our will. When I'm moving with the market, I always say, what is the market doing? How are the Tier 1, Tier 2 and Tier 3 charts shaping up? Throughout the past month, we've seen the DXY absolutely crater, the US 2-year, the US 10-year crater as well. That's led to an explosion in the euro and the Aussie dollar. That's consequently flown through to junk bonds, and Bitcoin and total crypto market cap have been doing well, but the market is quite overextended to the negative side. Retracement is really likely. The targeted rate of return has to always bear these factors in mind. One thing to keep in mind, often what we see is a big explosion in price. It can take out so many different sell levels, and you've seen even with Solana across the past 24 hours, I've been able to make buys and sells. In the last 24 hours, we've also had sells on Doge, and you can see I've been buying at structural levels on the way up. One thing I've noticed just recently, and this may really help you out, Bitcoin Cash is so overextended to the negative side. It may have a little bit more negative play in it, but it's very, very overextended. We would expect a bounce or a correction in this to the upside. This is just another way that you want to look at the market. You want to see what's hot and what's not. What you'll typically see, if something's not hot, it may witness some kind of blow-off inversely like this and start to rally. Identifying opportunities involves looking through the Tier 1, Tier 2 and Tier 3 charts, just like Daryl was talking about. One of the things that we've noticed, the DXY is incredibly oversold at the moment, as is the VIX. The US 10-year is very, very weak, and the US 2-year is weak also. We would expect mean reversion. In the past 24 hours, we've seen it. What typically happens when these things get overextended to the negative side, the S&P 500, the Nasdaq, Bitcoin, total crypto market cap, and gold get overextended to the positive side, and we've seen a lot of strength in those particular charts. Just exactly what we would anticipate on seeing. If we see continued mean reversion, we would expect the USD or the dollar yen to continue to strengthen, the euro dollar to continue to weaken. It's really important to look at Forex pairs. You don't have to trade Forex to understand that those currencies are really, really important to us. One thing to just be aware of, structurally XRP is on the edge of a cliff. It could move down very sharply in price because it has a negative fresh air gap below it. This is not a reason to panic, it's a reason to be excited. Those negative fresh air gaps get filled very quickly in both directions, both down and up. In the main markets, in the past 24 hours, we saw the tech sector get hit. This is to be expected when the DXY and the yields go up. Not surprisingly, healthcare and industrials did the best. Communication services, consumer discretionary, and IT did the worst. It's important not to get confused between short-term retracements in price and a long-term uptrend. When we look at junk bonds, when we look at the normalized price path inside the service, we can see junk bonds have been continuously trading above the normalized positive price path. We drew this price path out at the start of the month. We can see that we're very close to that normalized price and the positive direction as well. This is really good for markets. You can see that even though things can get overextended in the short term, things just come back to a normalized price path. That's why we draw them. When looking at the US 10-year yield, we've seen a considerable amount of weakness in the 10-year, and it's followed the negative price path, which we would expect. If the 10-year is following the negative, we would expect junk, the S&P 500, Bitcoin, total crypto market cap, the Nasdaq, and all the other underpinning stocks such as Apple and Microsoft, Nvidia and Tesla to follow the positive price path. This is why it's so important to understand interdependence and cross-correlation. This is another way that I pick my buy and sell levels. One of the key things to look at is the DXY, and we can see that that three-dimensional risk management curve was drawn in since the start of the month, and the DXY has so far been underneath it, but it's renormalizing, and this is to be expected. Yesterday, I put out a tweet on Twitter/X. I was trying to draw people's attention to this normalization of both the DXY and yields and what it would do to the market. Just be aware, when the DXY spikes up like this, it puts a lot of pressure on the main markets as well as crypto. This is what's been happening to price in the last 24 hours. When we look across the crypto market, Doge has been doing really well. And it's not just done well just yesterday, it's been doing pretty well. And it's coming up to some positive fresh air gaps. It could get really interesting for Doge. But don't forget, it's the DXY and the yields that influence just about everything. A lot of people don't see the connection between the crypto market and the main markets and Forex. Believe me, it's there. We know it. We also know that price is always moving in a wave, and the reality behind these different percentage moves is all about structural support and structural resistance. Solana is looking quite good, but it cannot escape the DXY's gravity, and therefore the DXY exerts its influence over the major indices and Bitcoin as well. It's vitally important to know the total market structure levels on the DXY. And if you know these, you know the DXY is going to come up into structural resistance. Its rebound could be very short-lived. Looking at the greatest gainers past 24 hours, Injective, Render, Theta, Polkadot. So good to see Polkadot back. Good on you, Gavin. Followed by Near, LDO, Tia, and Neo. The greatest losers past 24 hours, IOTA, Stacks, FTT, SEI, Clayton, CRO, Blur, and Uni. The amount of liquidations inside the crypto market has been like weekend trading. It's so tiny, 42.56 million. And we can see the longs and the shorts are having fun with each other. They're all over the shop. Yesterday was a pretty big day of data, and I just explained yesterday that these particular releases, these macroeconomic data releases, are high impact and they could move the markets. The thing that moved the market couldn't have been personal income, personal spending, core PCE year on year or month on month, because they came in exactly as forecast. it was in all likelihood the initial jobless claims, which came in a little bit weaker, which strengthened the DXY. If it strengthens the DXY, it's bad news for everything else. We saw this get reflected into the probabilities of a rate hike. It was 2.9% 24 hours ago. It's 4.6% right now. And that big increase in relative terms here to here pushed the DXY up and the yields up as well. When the yields and the DXY go up, that's really bad news for risk-on activity, aka crypto and the stock market. Yields coming up also hits gold. One of the things that I always do when I look across all the Tier 1, Tier 2 and Tier 3 charts, I'm seeking to assess where could price go reasonably in the next 24 hours. From this, I think about what is the down case, the neutral case and the up case. Having your risk management in play is really important. Fear is an absolutely terrible decider of what you're going to do in your life. Pretty much, if you act on fear, you'll create the very thing that you fear. So fear is something that you must kick into the bin. If fear of missing out or fear, uncertainty and doubt is driving your decision process, you will find that you will consistently make losses. It's really unfortunate, but there is a way out of it. That is positive excellence. Keep your mind focused on learning all the time. If you fall into blame, please don't do so. Just be kind to yourself. It's also important to be kind to others. You cannot be kind to other people if you're not kind to yourself first. Kindness is not a weakness, it is the doorway to learning, and learning has earning in it. Literally. Inside financial markets, if you want to earn a return, you have to learn. You cannot earn if you don't learn, and if you blame, you're just going to make losses. So that's the thing not to do. The way into success is to understand the structural levels on your Tier 1, Tier 2 and Tier 3 charts. When you understand how they're all interconnected, everything starts to make sense. What was incredibly complex starts to become easy to understand. It does take time. Just literally go one step at a time. Always remembering that life is a marathon, it is not a sprint. Without the structural levels and the understanding of how the Tier 1, Tier 2 and Tier 3 charts intercorrelate and interconnect, I would not have the confidence to place buys and sells inside the market. The Tier 1, 2 and 3 structural levels are my secret. The journey into consistent profitability is that it's a journey. It will take time. Congratulations to everybody who's getting there. Sanjeev said, he's becoming more active and already seeing that annualized return on investment hitting the account. Well done, my friend. If you would like to see more of my trades, please let me know in the comments. And what Sanjeev said is really good. The power of recycling funds is scary. Scary good. Thank you again to everybody who commented and watched. If you're new to the community, please reach out and say hi in the comments. You'll see we have one of the best communities on YouTube. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.